Hello everyone, good evening. Good evening. Thank you all for joining. Hope I'm audible. As I'm at a new place. Hope I'm audible. Right in the chat box. Good evening, guys. Open the chat for everyone.
Yes, sir. Yes, sir.
Thank you. Thank you, guys. Thank you. So, guys, quickly, today, what we will do is I will teach you something about uh, definitions. Now, these definitions are not formulas. We don't have to read it like a formulas. I have come across many students saying that, sir, हमने formulas learn किए. And if someone asks me, see what happened now, if you're a CFA student, you get that formulas very quickly. Probably it might also happen that you forgot the formula कि sir CFA में पढ़ा था, मेरा exam हो गया, या MBA में पढ़ा था. Now I am not able to recollect the formulas. It's been a long time that I am in MBA. I have done my MBA, etc., etc. So I don't want those things to happen. Now, if I want to talk about a value of a company, okay, हम we will just talk about value of the company. Okay, value means how do you define the value? Okay, basic one. So, value of a company. Anyone? Share price into outstanding shares. Guys, anyone else? It's just a. I will be back in a minute. Just write your answers. Okay, enterprise value, asset management, liabilities, DCF model. Okay. Now, this are okay. Okay. These are things are fine. Whatever you are, I know that you have learned all this through finance knowledge and all. Now, what if you are not a financial graduate? Let's say a 10th standard student comes to you, your brother, your cousin, someone comes and tell me, I don't understand this market value. I don't understand asset minus liabilities. And how will you define a value of the company? So now let me answer it. Okay, for 10th standard, let's say my brother is in 10th standard. He comes and tell me, okay, brother, I need to know what is the value of what does you mean with the value of a company? Okay. Acha, if I want to value you as a person, okay, let's say I tell my brother, you have your mobile phone with you, okay, have a mobile, he has his shoes, okay, he has his watch, okay, example. Okay. Now, if I ask him, if today you want to raise some money, okay, if you want to sell yourself, okay, how much money you will earn? How much money you will earn? So let's say he has a mobile of 10,000. If I ask him today, raise some money that you want to do some business. So what is the value? Okay, mobile of 10, the market value. Achha, now this is the market value, correct? And what is the difference between book value now? Let me start with market value. Okay, mobile market value 10,000, shoes of 5,000, shoes of 5,000, watch of let's say 15,000. Okay. Anna, you are giving all these formulas, but this is not a formula. I will ask you a few things. That time you tell me the formula. Okay. Mark. So I said, okay, all these things. Now he will says that I can, brother, I can raise 30,000 rupees I have with me. Okay. So now, do you know the exact value of a mobile phone today? I ask you guys. Do you know the exact value of a mobile phone today? That's I will go and sell the mobile at exactly 10,000 or exactly 2,000, exactly 5,000. So now you have said this, sir, market mein Is this the value? Okay. And now, how we define value. How we define value as an accountant or as an accounts. Acha, do you plan when you buy a mobile phone, do you plan to sell it off? Do you plan to sell it off? Whenever you buy, you will say, no, sir, I will sell this phone and earn more profits. Are you in the business of making profits? No, correct. You are not in the business of making. So obviously, this phone you might have purchased for 20,000 and then the value is at 10,000. Now, how do you derive at the market value? Anyone? Can anyone tell me how do you derive at the market value? You say you want to derive the market value of your shoes. Forget about mobile is still okay. Shoes. Depreciation. No, that is a wrong answer. You don't derive the market value by depreciation. That's a totally wrong answer. Demand of the product. Demand of the product, supply demand of the product, which is available, or maybe a product which is similar outside where people are buying. So that is the correct. Supply and demand. This is how you value. Whenever you talk about market value, it is the demand and supply. Can you tell the demand and supply of a mobile phone? That what is should be the exact price? People are willing to pay 10,000 and there are people who are willing to pay 15,000 as well. I will say market value is demand and supply. Is it possible to get the demand and supply exactly for your mobile phone? No. Achha. Can you get exactly the demand for your shares of, let's say, Reliance? Can you find the exact value if you want to sell your shares? Yes or no? Now, how did you divide how did you uh, arrived at this market value? Everyone knows what is happening outside. Now, this is a huge difference. I asked this in interviews at times. What is the difference between the market value and book value? Correctly, as you said, people says the same thing, sir, as per depreciation. That is not the value of your product. Depreciating value is something different. I will tell you, I will come on to it. When the market value is always derived by the demand and supply, or maybe whatever price of the similar product that is going on in the market. Now, it is very difficult to get a value of a mobile phone. Let's say you have an iPhone. You have an iPhone, 1 year used. I also have an iPhone, 1 year used. Can the value will be same of both the iPhones? Can I say it depends on the factors, how you have used it, the condition of the iPhone? It all depends. So this all things now, you will never get market value of this all products. Never ever. Now, if I talk about a bit on the financial part, now let's say if I ask you, what is the value? You cannot tell me the value based on the market. Okay, dad or brother, this is the value of my mobile phone. You cannot estimate it. It's very difficult to estimate. Now, what you will say, ideally, what you will say is, I will not value mobile based on the market value because there is no as such market for mobiles. There is no as such market for shoes and watches. This all are called the book value. Now, what is the book value? What is the book value? Book value of a stock, book value of an asset. Book value. So book value, if I talk in very easier term, book value is the accounting. Book value is the accounting. Okay, accounting value or value as per books. Okay, value as per books. Basic value as per books. There is value as per books. There is value after as value as per market. Okay, two different value as per books. Now, when you talk about value as per books, yeah, that is what is value of depreciation. And now, what is that depreciation? It is. Can anyone tell? We find depreciation as a base of percentage. 10% depreciation, 15% depreciation, 20% depreciation. Correct? Those who know, those who don't know, fine. Don't even remember those things. But those who know, 10%, 15%. Now, can anyone tell me how did we arrive at 10%, 20%, 30%, whatever the depreciation is? How do we arrive at that? Okay, equal percentage across useful life and pro rata basis, fine. By estimating life condition. Okay, as of now, I have purchased a mobile phone. What is the depreciation rate on a mobile phone? Basic. What? Can anyone tell me? I purchased an iPhone for 90,000. How much percent should I charge? No, nothing. No scrap value, nothing. Okay, Harshal, it depends on useful life. Correct. Cost minus residual value. Okay, fine. I don't know anything. I don't know anything. You tell me, derive the depreciation value for iPhone. Acha. See, correct. Few are answering it right. But now, when you talk about depreciation, it is nothing but correct. Useful life. It is nothing but useful life. It is nothing but useful life. If I ask iPhone, what is the life of a mobile phone usually? Usually a life of a mobile phone, 3 to 4 years. 5 is very nowadays, 5 years is very rare. 3 years. 3 years, I will say 3 to 4. So I will like 3 years. If I use this phone for 3 years, so my expense for the year, and can anyone tell me expense for the year? I'm using an iPhone. I'm using an iPhone, which is for 3 years, correct? So I'm just asking because profit and loss statements are made for 1 year. As of now, Harshal, assuming life is zero, I will come on to it. Assuming life is zero, you will throw off that phone. So can I say, guys, straight away the depreciation? So expense, I will not say depreciation. I will say what is my expense for the year? If I spend 90,000 for 3 years, so obviously if I divide directly 90 by 3, 30,000 is the depreciation for 3 years. Depreciation amount. Now, if I want to talk in percentage terms, so Harshal, in finance, we only use straight line. We don't use WTV. We don't use any other method. There is also a reason for that. Because we are not accountants. We are businessmen. If I divide it, 1 divided by 3, it comes to 33.33%. What if the average, you use the phone for 5 years? The depreciation comes straight away at 20%. Now, few are saying that, now let's say you have some value remaining. Okay. Now, assuming you replace your phone, exchange offer, and you get an exchange bonus of 10,000 rupees. Okay. Exchange bonus of 10,000 rupees. So what is the cost of your iPhone that you purchased? Cost value after 3 years. Cost value after 3 years. Means that iPhone costed you at 90,000 minus 10,000. That is 80,000, and you have used it for 5 years. It means that the depreciation is 16,000. Okay. And depreciation is nothing but useful life. In finance specifically, it is useful life. Means every year, how much you spend? You spend 16,000 on the iPhone. Every year you spend 16,000 on the iPhone. Now, if I ask you what is the value, what will be the value of the iPhone after 2 years? What will be the value of an after 2 years? 1 year you use, second year. First year 90,000, 74,000, 90,000 minus 74,000. So if I ask my brother, what is the value of an iPhone today? He cannot talk about the market value. He will say, usually, sir, the life of an iPhone is around 5 years. And I have using it. Assuming I can get an exchange bonus of 10,000 after using 5 years. So probably the value of my iPhone should be around 58,000. This is called the book value. This is called the book value, or I will say more specific, book value is nothing but cost at which you purchase. Cost at which you purchased minus the assets used. I will talk about in depreciation. Asset used, and this is nothing is called accumulated depreciation. So what is the accumulated depreciation for iPhone in 2 years? Till now, how much you spent? 32,000 you spent. This is called the cost value. So whenever you talk, every asset you get on the balance sheet, it is always the cost. It is never the market value. It is always the cost value. Remember this part. Cost minus depreciation for inventories. Is there any depreciation for inventories? Means do you use inventories? The things that you have purchased for selling, you don't use it. These things you don't purchase it for to sell. So obviously you have to get because you use that, and that is why the value decline. Inventory you don't use. So inventory is valued at cost. So everything you must have learned is inventory is valued at cost. Why it is valued at cost? Because if someone asks you what is your worth today, you cannot say that I have, purchased the market value of my phone is 10,000 and then, I will sell it at 50,000. So my market value of the phone is 50,000. See, because that selling price can be different for everyone. Till you don't have a specific market for it, you cannot talk about selling price. So whenever I talk about book value, it is always the cost that you purchased, the cost at which you purchased. Okay, now from this part, now if I ask you something about what is the market value. Now see here, now this all things he have, assuming now this is cost minus depreciation. Okay, this all the price that he has. He also have shares of Reliance. Okay, also have shares of Reliance. He purchased for 5,000 cost. Today, the value is 7,500. Okay. Now tell me value of my brother. Value of my brother. Means today, if I ask him what is the value, how much is the value? You person, what is the value? What will it be? 35 or 37,500? Should I value at 5,000? Should I value at 7,500? Now, why did I value at 7,500? Because the shares of Reliance do have a live market. This all things don't have a live market. So if I ask brother, what is your worth today? What is his worth today? It is 30,000 plus 7,500. Now what if this money is been borrowed? Out of the 30,000, let's say 5,000 is borrowed. Because all this he purchased, he didn't purchase on his own money. Let's say mobile was on EMI. So he has borrowed 7,500 minus borrowed 5,000. Borrowed is, I will say, debt. That is what is called his worth today. His worth today is 37 minus all the assets minus the liabilities. It is not a formula, asset minus liabilities. So now this is called, now I also feel this is called net worth. This is also called the book value of the firm. Now remember this because this word comes interchangeably every time. Net worth, book value of the firm. This is also called the net worth. This is also called the book value of the firm. This is also called shareholders funds. Yeah, also called shareholders funds. net worth, book value, shareholder fund is all one and the same. Asset minus all your long-term and short-term liabilities. Don't get confused with this. This is the value of my brother today. That whatever things he have and whatever things he have borrowed. So now there's again a question. Shareholders funds. Okay, shareholders funds. Now I don't want any. I don't want any. I know you guys know this, but I want to ask in a very simple terms because I want you guys to tell this to your 10th standard or maybe 8th standard cousins or brothers, cousins or maybe your friends, because I don't want you to tell me. I know much more better than you. The point you are able to tell it to a person who is not that educated, it means you have understood it. If you go with the formula, current market price, market value, enterprise value, the person sitting next to you or your person you're dictating, he will never understand these things. He will say, "Hey, sir, if I talk this way to my brother, na, he will stop talking to me." He said, my elder brother is just, he's a boring guy. Because I teach my brother. He's in 10th standard now. I teach in the same way. Just assume what if I start with him saying it is an enterprise value. An enterprise value, what is the formula? Equity value plus debt minus cash. I talk about all those things, he will go mad at me, saying that, I have never heard of this all words. What are you talking about this? It's very basic. Now I will ask you, Nadasia, I will ask my brother, assuming you are my cousin brother, I ask you guys, how did you purchase all these things? Who gave you the money? Who gave you the money to purchase all these things? Parents, correct? Parents. Parents in in finance, they are called investors, since it is a business, or equity, share, capital, money. Now, who gave you that all these funds? Either investors or either one and the same thing. Equity is called what is all equity, share, capital. Obviously, you must be having 32,000, right? Then only you are able to purchase all these things. You might be having 32,000 with you. Acha, what if out of this, what if out of this, my brother is saying, my brother is saying, Rishabh, I have 10,000 worth of mobile, 5,000 worth of shoes, 15,000 worth of watch, and I have borrowed 7,500 worth of shares of Reliance. So I have total 7,500, but I have also borrowed 5,000 from my friend. Okay, right? He has also borrowed 5,000 from his friend. So if I want to liquidate everything today, brother, I can give you 32,500. But I asked him, how did you purchase all these things? Nasia, he told me, brother, now he calls me Dada. So, Dada, my dad gave me 20,000. Okay, yeah. My dad gave me 20,000. I asked him, then how is it possible that you have so much of assets? If your dad only gave you 20,000, that is means investor, equity share capital. Okay. Then I will ask him, where is that 12,500 coming from extra? Where is that 12,500 coming extra? Anyone? Guys, debt is already done, no? Told no? Debt is already done. See, he has today, if I ask him, no, I want money. Let's say he is my elder brother. I ask him, I want to raise money. Sorry, younger brother. Whatever you have, sell it. I said, whatever you have, sell it. He said, brother, Dada, I can sell all these things. Okay. And maximum I can give you how much? 32,500. No. So see, we are not talking about profits over here as of now, Kunal. Okay, fine. So that extra 12,500, he will say, Dada, I earned it from doing a business. It is my profits that I have earned from doing some kind of stuff, selling, whatever. selling my watch, selling equity shares, whatever he will say, the 12,500 is the additional profits that I have made. And profits is nothing but income. These are income minus all the expenses. Income minus all the expenses. And where do you get this amount? In a financial statement, P&L, balance sheet, or cash flows. Where do you get this amount? In the P&L, because obviously it is an income and expense statement. It is not a P&L statement. It is an income and expense statement. So what is shareholders funds? Acha, now that profit belongs to whom? The shareholders or my brother. Means that profit belongs to my uncle, my kaka, or my brother. Tell me now. Does that this profit belongs to investors or does it belongs to my brother? Yeah, correct. My kaka. Obviously, it belongs to my uncle. Is because how was he able to get all these things? Is because he was able to do it because his parents gave him the money. So obviously, the first the parents have the entire rights to take his 12,500 rupees with him. But since he says that my parents are not asking, I am giving them some money out of my pockets, out of my profits. I am giving them some profits out of my pockets. That is called dividends. See, dividends is not an expense. You giving your money to your parents is an expense for you in the same house. Is an expense for you. So dividends is not an expense. Just remember this. Dividends is not an expense. It is just sharing your profits. I have seen this, even CA people give answers that wrong. This a dividend is an expense. It is not an expense. It is just distribution of the profits. And all this amount is nothing. This is called retained earnings. But see, now assuming if I tell my brother all these things that you now you gave some money to your parents, so what is remaining with you? But if I tell me what is retained earnings, suddenly out of the blue I ask him, so today now his name is Advay, but today we will talk about retained earnings. Will he even be interested to talk with me? No, I will talk about retained earnings. And after 10, 15 days, if I ask him again what was retained earnings, will he remember the formula? It was income minus expense minus dividends. No, he will not. This is how the finance work. If you learn all this by formulas, definitely you will forget the formulas. I have seen MBA finance students forgetting what is retained earnings. Retained earning is nothing but all your income, all your expenses remaining, and then you also pay it to the shareholders. Shareholders means your parents. Basically, you giving money to your parents to run the house. How can you tell it as an expense? Just imagine saying to your outside people that now I give some amount to my parents and it is an expense. We all stay in the same house. So I don't buy the groceries. My dad my dad gets the groceries, but I give him the money. So it's an expense for me and income for my dad. See, if it's expense for you now, always remember it is income for someone else. Always remember this. Dividend is income. First you invest, then only you get dividends. How can you tell it it's an income? I got a dividend income. Correct. How you got it? When you invested something. Achha, now more complicated things over here. More complicated things gets over here. Because now investors are of two types. Correct. Everyone clear retained earnings? I hope this was very basic answer, but when you tell it to someone, probably talk in this way. Whatever is remaining with you after paying all your income and expenses and giving to your parents again, what is remaining is 12,500. Net worth, book value of the firm, shareholders firm is all the same. But remember, while calculating book value of an asset is only the cost minus depreciation or cost at which you purchase. But for shares, companies which have live market, at that time you don't talk about the cost, you always talk about the market value. Just remember this. These are the things which are asked in NISM exams. Okay, fine. So now things gets more because the investors are of two types. Okay, one is common shareholders names. Okay, common shareholders. One are preferred shareholders. Things just starts complicating because the words are so much complicated. Retained earnings was so simple. Now these are also investors only. This is nothing. Common shares and preferred shares. Now those who know, if may I ask, what is the difference between common and preferred? If may I ask, तुमको पता होगा ना, पढ़ा तो होगा तुम लोगों ने. You must have read all this thing. You are finance guys. Those who are. What is the difference between common and preferred? Major difference. Major difference. If I ask you what is the major difference, why do people get preferred shares and common shares? Preferred shares gets dividend first. Okay. Equity shareholders has voting rights, fixed dividends to prefer, and prefer do not. Harshal, preferred may have voting rights. No, preferred don't have voting rights. No, it doesn't have voting rights. Common gets voting rights. Achha, now if I ask you a question, would you like to be a preferred investor or a common investor? Which and why? Would you like to be a preferred investor or a common investor? Common, if let's say you want to buy a shares of Reliance, tell me, would you like to be a preferred or a common? No, say Gokul, both are risky. In the event of default, both will lose the money. Common if holding, good holding. Okay, Mahesh, agree. I'm giving a live example now. You're taking a shares of Reliance. Would you prefer to be a preferred shareholder or a common shareholder? You want to be. Correct. Palak is right over here. Guys, do you think you can buy 30% of Reliance? Are you in that position? What you will do with the voting rights? Your voting rights won't. And do you think that you will give vote that I don't want Mukesh Ambani on the board? And your one vote will have value? That's why I asked, I give you live example. What if you are holding a shares of Reliance? Would you like to be a preferred shareholder or a common shareholder? See, now I would like to be a preferred shareholder. Reason is because I will get a dividend first. Will get a dividend. Usually it is fixed but not compulsory. Okay. Usually fixed but not compulsory. Hey, what will I do with having Reliance voting rights? What will I do with having Reliance voting rights? Okay, liquidation come later on, Vishal. Okay, but first let's see. What will I do having the voting rights of Reliance? See, I am investor. I will prefer to have certain kind of dividends, correct? Certain kind of returns. I know that company is giving me the returns. That is fixed, I know. So usually preferred shares are written like preferred shares at something like 8%. You know what? Preferred shares have a dual benefit. One is of debt and equity. One is of debt and I will say market price. Means you are getting a fixed dividend plus the market price is also increasing and decreasing. Probably assuming we are in the going concern, Reliance price is increasing. So one of the important features why I will like a preferred share is because it will give me two benefits. First, I will get a dividend, which is usually fixed. And second, it has also have this importance of share price increase. That even common will get the same thing. Prefer will also get the same thing. Now, why the hell you want to be a common shareholder? Why you want to be the owner of Reliance? Do you want to change the voting rights? Are you actively in the company that you own 40-50% of the company and you want to change, give your votes? You must have getting votes, that letter, cast your vote. How many times you vote? Do you even follow any corporate events? There is a director change, there is a CEO change. Do you even follow it? And even if you follow it, what is the problem? Do you understand the company? As a research analyst, you are just talking about formulas. You don't even know what is happening in the company. But no, I want to be common shareholders because at the time of liquidity, you will get the remaining. Forget about that. That doesn't work in practical life. Reliance is not going to liquidate anytime soon. Not even in the next 50 years till you are alive. Okay. So personally, so that is one. Get into personal levels, then it will help. Don't think about like an investor, like you have some 10,000 crores with you and you are investing in a company to get the to get the voting rights. Finally, the BOD who decides what is to be done. That's what. Afterwards, so that is what Ritik, I'm saying. Your one share, your one voting right, will it even impact the decision? No, I want to be a common shareholder. I will rather prefer to be, because preferred shares are not there in India. But if there are, I will prefer shares because I will get a fixed dividend. Okay, and I also have the same common holders. I have the same price, same thing. That market price is same. Plus asset claims. Yeah, in the event of default, as it says preferred. Now let's say liquidation. Preferred shares will get the first preference in the event of default. In the event of default. Correct. Alok is now, you're talking now in sensible point. Common shares is only beneficial if you want to buy a substantial stake. Let's say the people in Shark Tank or maybe PE investors. Achha, who take substantial stake, the PE or the venture capitalist? Private equity funds or the venture capitalist? Who takes substantial stake? Who takes substantial stake? Guys, substantial stakes is where you start, where you actually involved in the company decision making. PE fund is not the venture capital. Okay, venture capital, Shark Tank people. How much percentage they buy? Shark Tank people 1 and 2% na, of the equity. You see in a Shark Tank. So it's substantial 1% substantial stake. Kind of angel, yeah. Angel, venture capital, one and the same. It is the private equity funds who will get the common shareholders. They will rather prefer, usually, if you have seen the Shark Tank episode, at times they also say that, I will give you 1 crore rupees at 10%, and let's say more 1 crore rupees at 10% interest rate. You see that they say that. If you have heard that any time, they say that I will give you 1 crore rupees for 8% interest, and then that will be converted into full-time shares for 1 year. If you have heard that, they say that, okay, I will give you 1 crore rupees for 8% interest for 1 year, and then I will give you, then that will convert it into 2% equity. Now, what is that? That is one type of preferred shareholder. They are getting the dual benefit, either debt plus the equity. Okay. Usually fixed, but not compulsory. Okay. Means dividends giving is not compulsory. So see how I'm linking all these things. Your venture capitalist, your private equity, preferred shares, common shares. Even in Shark Tank, we see that all those things. So all these things are happening around us. Just that we are talking about preferred shares. Arey sir, wo kuch tha. I have learned this in MBA, but I forgot now. And I ask you why preferred, sir? Because of liquidation. Are you an investor? Think from you are equity analyst. उनके पूरे कंपनी में स्टेक बाय करते हो. One simple question I asked. Would you be common or prefer? You say I will be common. So my personal question will be, are you crazy? Why you want voting rights? Do you want to buy the company? Are you Warren Buffett? Do you want to buy the entire company? So see, these are the benefits. One is debt plus market price, preferred shares. And so why the hell you will own common shares? Common shares are only one who actually wants to run the company. All the risks are borne by common shareholders. It is just that they don't have voting rights. That's it. That is why preferred shares are not given in the markets. It is a problem. In that preferred shares, also, there are two parts. One is cumulative. Yeah. Cumulative, non-cumulative. I'll tell you what is it. And one is convertible. Okay. Cumulative, non-cumulative, permanent. Yeah. So Suraj, preferred shares have the same thing. There is nothing different. Shares are shares. It's just it will be written into a preferred share. That's it. You don't have voting rights. That's the only difference. There are no different set of shares. Okay. That's the only difference. Suraj has a good valid point that he might be current market price. CMP is current market price, means the price that is in the stock market. Let's say if Reliance is trading at 1,000 rupees. So obviously the preferred share also will have 1,000 rupees. The common share value is also 1,000 rupees. There's no difference in that. Okay. Now what is cumulative? Cumulative is if, let's say, if dividend is not given in a year, can happen. Na? Companies into losses or they don't want to distribute dividends. That dividend will be carried forward. Correct. Again, example also carried forward. And the opposite is right and opposite is over here. If the dividend is not given, if the dividend is not given in a year, you lose the dividend for the year. Which talk you talk about preference shares? That's what, na, Shahbaz, why? He has said that, sir, I have noticed sometime when there is a news related to preference shares, the stock price tends to go up. I have never seen such kind of news. But okay, if there is such kind of news, if preferred shares are issued in related to common shares, it is good because in that preferred shares don't have voting rights. So your equity is not diluted. Your main profit is not diluted. So whenever there is an IPO, and in an IPO, if they are issuing preferred shares, it is a better option because you are not giving your voting rights to someone else. Voting right as in to make changes in your company. See, as an investor, it is always preferred to have preference shares. If you are in the management position, it is never preferred to have common shares. It is unnecessary dilutes your equity. But preference shares, however, has other issues like you have to pay dividends and all. So that is why in India they don't give, because in India there are very few companies who give dividends, and in a country like India, anything can happen. Market can tank 20%, market can increase 20%. Okay. Convertible differences. So now what is the difference? Those who don't know, just giving it very quickly. Let's just say you have invested, let's say 1 lakh rupees for equity shares. Okay, this 1 lakh rupees in your preferences. Okay, preferences. Now you are cumulative. Okay, this is a cumulative. There's name for that. Cumulative preference shares. Okay. Trushil, I will come on it. Book value and face value. Trushil, what was book value? What was book value? Trushil, now if you have asked this question, then I am very disappointed. I have just not told you what is the book value. Why are you asking me the same? Then your question should be, sir, what is face value? No? Why are you asking book value again? Net worth, shareholders, funds. I'll come on to it. What is face value? After this, I will come. Okay, preference shares. Okay, now guys, I will tell you one more thing. As a recruiter, okay, or maybe as a professor, or maybe as someone who teach and place you, I also have an eye on the what are the questions you are asking. Okay, even if you don't know, it's fine. But I always have an eye on the chat, what people are writing on the chat box. Though I don't show that, but I always have that what question this guy is asking. And that question has been fit in my mind because okay, this is something different that the guy is asking. And it should not be in the financial terms. I will tell you, your question shouldn't be in the financial term, it should be very basic. That is where you are differentiated. This is my personal experience. Whenever you go for interviews, whenever you talk with some experienced guy, always talk in basic terms, because if you start talking about into high end terms, let the experienced guy talk about it, you don't talk. The point you start talking into higher terms, that impressing the senior, you end up getting fooled of your own self. Because at times, if you don't understand things, doesn't make talking about enterprise value. Let him talk about it. Let you understand. You know that what is enterprise value. But while you speaking it, probably get it into very basic terms where you can break it down into things where even a 10 standard student can understand. Forget about 10, even 8 standard student can understand this. This is how I will say, having a chat. This is my personal, uh, I will say, evaluation of you guys, whatever questions you are asking. Okay. Preference. It's cumulative means what? Let's say you have invested 1 lakh rupees and the cumulative is around, means you buy a cumulative share where it is 10%. Okay. 10% of dividends. Usually they say like this, cumulative at 10%. Means you will get a dividend of 10% every year. Okay. That is 10,000 first year. It is fixed. Okay, it is fixed. 10,000, then every year you will get. So now what if the company gives you 3 years, fourth year it's miss. Okay. Fourth year they missed. Okay. Fourth year they missed. So fifth year, again, they said that they will give 10,000. That is, and the fifth year, how much will you receive? You will not receive 10,000. In the fifth year, you will receive 20,000. Okay. Basic cumulative. I'm just giving a basic answer, not spending much time on it. But when you talk about non-cumulative, same thing. It works same. If it's non-cumulative, then fourth year gone, then gone. Next year you will only receive 10,000 only. You will not receive 20,000. So that is why cumulative are much more good than only preferences. I mean, if I want to buy shares, I will buy preference shares first. If common and preferred, I'll prefer common, and then that common I will have a preference to cumulative shares, not non-cumulative. Okay. So I can buy at a premium. मतलब मैं बोलूंगा कि 10 रुपए का है तो I will buy at 12 rupees. That's fine because I know that I will get a cumulative dividends. So basically, this preference shares are purchased from the purpose of having both equity benefit as well as debt benefits. It is only that you will not get the voting rights and the share in the business. If the value increases, EPS doesn't belong to you. This is 10%, so you will get 10% only. Okay. Probably they don't increase it. 10% is fine, you will get for rest of the life. Common shares can get higher amount because yours is fixed. Yours, because you have invested 10 lakh, will only get 10%. But it is a fixed amount. Achha, now what are this convertible? Convertible is like, it can be cumulative, it can be non-cumulative. It can only be, now convertible preferences are said to be only preferential without dividends, no fixed percentage. Now preference can also be convertible. Cumulative shares convertible. Now what will happen? This convertible shares will get, after a certain years, let's say after 5 years, okay, you get all the dividends and all. After 5 years, they will say that, okay, from the 6th year, your preference shares will be converted into common shares. You will get the voting rights. Different shares will convert into common shares. But what is the backdrop of this or negative point? That now you will get the voting rights, but you might lose on the dividends. क्या करोगे voting rights से? मुकेश अंबानी को बोलोगे निकल जाओ. Now you will have voting rights. Now I will judge the company. I will judge. I will say what Mukesh Ambani should do and what he should not, because I am now common shareholder of the company. I will buy stake, and sometime I will try to buy the entire company of Reliance. What sense does it make to buy a common share? But we know we are common shareholders. We are the holders, equity holders of the company. I am owner of Reliance. Useless people. You don't understand basic. अरे खुद पैसा कमाओ ना, earn money on yourself. Why you want Mukesh Ambani to earn for you? And he is giving in front of you, but no, I want to be common shareholders because I want voting rights. It is only for the investors, okay? PE funds, not even venture capitalists, PE funds. Now convertible is same like what I have told in Shark Tank. For let's say this might be for first 4 years, he will give me 8%, and after that, he will give me some stake in the company. Okay, it's like that. This is usually preferred for venture capitalists so that now see, this is dividends are not compulsory, correct? Usually in Shark Tank, they talk about actually debt. They talk about convertible debentures that we'll do next after this equity. Convertible debentures that they first give you debt for 5 years and then they convert into equity. So they get both the benefits. Same, huh? So convertible debt and convertible preference shares are one and the same. But preference is only that there is nothing fixed. Debt it is much more preferred. Now, okay, sorry, I gave the answer. But if given a question that convertible or convertible preference, convertible debentures or convertible preference shares. Debenture nothing but debt, typical debt, loan. What is preferred? Convertible debt or convertible preference shares as an investor? Same. What is the difference between convertible debt? It is just that this will be fixed. This all will be fixed. Every year you will get. And they will have, obviously, debt holders have the first claim before equity holders. Okay. So obviously, convertible debt is a much preferred option. Achha, now, let's say if it's a growing company, let's say a startup like Zomato, okay, growing very fast. Would you prefer convertible debt or equity? Starting only. Would you prefer a convertible debt or equity? Common even now. If it's a fast growing company. Achha, okay, Zomato is not a start. Assuming now it is not a startup. It is not a startup. It is already a growth company. Let's say something like Maruti or something like Reliance. Zomato is that big. Convertible debt or equity? Stock market grows at what percent in India? अभी आते खुद पे आते हैं ना. Let's come to one. What is the growth of stock market in India? Any stock, random Nifty 50. Go and Google it. 12 to 15, not 8 to 9%, Kunal. It is 12 to 15%. Do. चलो दिखाता है तुमको. You don't believe me. That is why Google say you need to ask question. What 1%? What is the growth of stock market in India? Google करो Google. वो भी मैं ही करूँ अभी. Google, what to Google? अच्छा, what to Google is percentage return of Nifty in the last 25 years. Do CAGR growth. CAGR. Always talk in data, guys. 1, 2, 3 ऐसा नहीं होता random. Always data backed by. I'm a recent analyst ना. Told you that day. Data backed by a story or story backed by a data. कहाँ पे लिखा है बताओ? 14.2%. सॉरी, वो 1% कहाँ पे लिखा है बताओ? निफ्टी CAGR last returns in last 15 years. Okay. 15 years में ज्यादा होगा. बिकॉज अभी कोविड था. 17%, 15 over the last 15, 5 and 1 year. 1 year 28% है. हाँ, IRR is specifically, this is we are talking just about the Nifty. So XIRR will be if you get dividends and all. वो हो जाएगा तो इससे ऊपर ही जाता है. Correct. Is more than this. It goes to around 15% XIRR. जिनको नहीं पता है avoid it. So let me which FDs in India give 12% return? Which FD in India gives 12% return? Which FD is given? What is the FD rates in India? Max, not about senior citizen, huh? Basic, your. What is not senior citizen? Don't talk about senior citizen. Talk about major banks. SBI for that sense, very safe bank. What is the FD returns? ये 7%. ये भी गलत, वो भी गलत ना. खुद का रिसर्च भी गलत होता है ना. मेरा तो छोड़ ही दो. 6.5% जनरल सिटीजन. सीनियर का 7.5 है. कहाँ से 8%? कौन से अभिषेक, कौन सा बैंक 8% देता है? एसबीआई में कौन सा ब्रांच है बताओ मुझे जरा. विच एसबीआई ब्रांच गिव्स 8%? आई ऑल्सो वांट टू इन्वेस्ट. 8.5, Aman. Tell me which branch of SBI gives 8.5% return? नो नो, आई सेड एसबीआई ना. बंधन तो कल बंद हो जाएगा, सब जो डाला एफडी में वो भी चला जाएगा. स्टेट बैंक इज वेर इज आई एन सेफ. आई कैन पार्क माई लाइफ सेविंग टू स्टेट बैंक, नेशनलाइज बैंक. थोड़ा बहुत ज्यादा होगा आईसीआईसी एंड एक्सेस का, but those are still risky bank. Now, those who answered, why I'm giving all this example is when I asked you that, will you take a convertible debt for a company like Maruti? कितने में मिलेगा तुमको debt मारुति से? And what percent will you get the debt? Maruti is also bigger company. It is same like SBI. तो उतना ही होगा ना, 7-8% होगा ज्यादा से ज्यादा. Now, those who answer that, for I will take a convertible debt means for the first 4-5 years, you will forego the 12% return, ना? And then I will convert. क्योंकि मुझे debt, I am getting money today. Convertible debt or convertible preference, usually convertible debt are only given for startup companies where though the growth rate is high, but is it sustainable? Company like Zomato, would you invest entire money in Zomato? You don't know what will happen for Zomato tomorrow. At that time, you will prefer a convertible debt. कि चलो 5-6 साल तो I will get a fixed return and then I will convert looking at the company's growth. And that is convertible option. There is an option of convertible. Compulsory भी होता है, there's convertible option as well. कंपल्सरी कन्वर्टेबल वो तुम एनआईएसएम में नहीं है वो. कन्वर्टेबल कंपल्सरी कन्वर्टेबल एंड यू कन्वर्टेबल डेट. यूजुअली देयर इज 5 years. After 5 years probably they will convert into equity share, and that is also, or else Zomato will pay back the money. So I will prefer, I will not go for a company for Zomato with a equity, though it is exceptional growing. You don't know what will happen tomorrow. But a safer company, first of all, it will never issue a convertible debt. यही नहीं पता तुमको कि कौन से कंपनीज डेट इशू करते हैं, कौन से कंपनीज डेट इशू नहीं करते. मारुति मार्केट स्टॉक इज ग्रोइंग एट 15% एंड यू वांट टू इन्वेस्ट इन डेट वही कंपनी का. व्हाई? ना इसमें किसकी गलती है? प्रोफेसर की गलती है, तुम्हारी गलती है. उसने तुमको सिखा दिया व्हाट इज कन्वर्टेबल डेट, व्हाट इज कन्वर्टेबल इक्विटी. दैट इज व्हाई आई कीप ऑन आस्किंग दिस क्वेश्चन इन द क्लास. फिर तुम सीए हो, सीएफए हो, एमबी हो, इट डजंट मैटर बिकॉज यू डोंट अंडरस्टैंड योर ओन मनी. I get this answer 8%, 8.5%. Market is giving 1% return. Not sure where you get all this data from. उनको बताया मैंने 2 data. 12% historical which if you take dividends and all, so easily it goes to 15%. नहीं, बस हम सिर्फ को पढ़ाई करना है, हमको सिर्फ एग्जाम क्लियर करना है. And then what, sir? Refer me to a role. I want to be a portfolio manager. I want to be a hedge fund manager. खुद के फंड मैनेज नहीं हो रहे तुमसे. खुद का पैसा किधर लगाना पता नहीं है. And you will manage companies' funds, or else you will advise people who have money. खुद ही पैसा नहीं मैनेज, so that is what is the important thing. Start managing your own funds. एक शेयर है तो एक शेयर लेके देखना. If you have money to buy one share, at least buy that one share and give a reason that why did you purchase out of the 5,000 company, why did you purchase a share of that specific company? And if given a choice, would you prefer a debt? Would you prefer a convertible cumulative debt, cumulative preferred shares, a non-cumulative or a convertible preferred shares? वो भी reasons देना. So this all the reasons are asked in NISM exams majority of the time. When will you buy cumulative debt? When you will buy non-cumulative? When you will prefer a convertible preference shares? अच्छा, convertible preference share is good from investor point of view or a company point of view. Let's say if you are a company, would you will prefer a convertible preference shares or you will only keep it preference shares? And then company point of view. The company point of view, will you issue a cumulative preferences or a convertible preference shares? So I will say this is only one. This is same. This is a part of preferences only. Normal preferences. There's types of it. And one is convertible preference, totally different. As a company point of view, acha, you will prefer convertible preferences. Okay. Means if an investor is investing in your company, and I will give you an example. Abhi just preference shares. Let's say you have your own house. Okay. See, you have your own house. You gave me the ownership of the house, but you said, sir, you stay out of the house. See, you require some money to run the business. You said, sir, I give you the shares of I will give you the shares of my company, my house, and I will give you dividends, but stay out of it. Okay, you own the house, but you don't have any rights to come and talk anything about us. Okay. See, you have your own house. You gave me, let's say, 5% of your house. I gave you some money because you wanted to do some interiors in your, and you said, sir, I will give you now 5% or maybe 10% of the profits every year. Okay. Now, after 5 years, as per your answers, you are saying that, sir, now you become the owner of our house. You can come anytime in our house and stay. Okay. Because now we are converting your outside stake into inside stake. Good. Now I will come and say, okay, the interiors that you have done is not good. I want this to be changed. Tell your father not to sleep over here. I also own this place. Would you be okay? Would you be okay? No. Now, no. Now I know. You. I'll come at your house and stay. You too don't know me. We are strangers to each other. Now no. Now suddenly no. When I ask you preference from an company point of view, preference share is preferred or convertible share is preferred. These are convertible. Okay, convert. Now give me. Everyone give me convertible share. These preference shares are okay now. Why you want someone to come at your place and take? They don't have rights. I will give you dividends and stay away. Stay away from our house. Don't come and interfere in our house. Do you want me to interfere in your house? We want a third party to interfere in your house. How wrong we are learning finance. You can realize this. इतने गलत pace है, and you want to be an equity analyst. You want to be a portfolio manager. Assuming this all question are asked in interview, DCF, VCF is not asked. What you will do? Because as a fresher, I will not expect you to know DCF. I will expect at least you know what are preferred shares, what is convertible debentures. These all questions are asked in US company, MNC companies. This kind of questions. And this is a part of research analyst exam. You get this in the case studies and all at times. I get answers from my students, not my students, usually MBA student that, sir, I was able to write all the formulas, but in the case study, I was not able to write. I failed in the case study. Because you don't understand the case. You understand formulas. The one who have good memory get cleared at the exam, but one who doesn't have good memory, probably they fail. And the same thing are asked in CFA. No? It's all logic. CFA is nothing pinpoint answer. It is all logic. Okay, now quickly I will get into that face value because I wanted to end it. Someone asked me what is the difference in face value. Now, when you gave this 1 lakh rupees to the company, so he must be giving you some shares, correct? When you give this 1 lakh rupees to the company, you must have given him some shares, right? You must be giving him some shares, right? Right, now share certificate. You also your go and find your own property. You're going to ask your dad. Even the property has a share certificate. Your house, and this house belongs to you. There is a certificate for that. Okay. And let's say the certificate, when it was purchased, there were 10 certificates. Sorry, 100 certificates given to you. Okay, 1,000 certificates given to you. 1,000 certificates when you purchase the house. Let's say you purchase a house for 1 lakh. Okay. Let's talk about 10 lakh. You purchase the house for 10 lakhs and there were 1,000 certificates issued. Just what is the price of one certificate? What is the price of one certificate then? So what if 1 lakh were issued? 1 lakh certificates were issued. Hard copy certificates, okay. That is the face value. Only at the start. Only at the start. Acha, face value, I will say it is also the, can I say purchased at cost? Something purchased at cost. First day when you purchase the shares. Originally when the shares were issued. What is things that are purchased at cost? Cost at which you purchase something. Cost at which you purchase something. Assets are called book value when you purchase something which is the ownership. When you purchase, you don't purchase an asset, now you purchase ownership. And that ownership is called face value. Same thing, book value and face value are one and the same. Face value is only used for shares. Value that when it was purchased, the share, when you purchase the share at the start or when it was issued. There was 1,000. And how do you get that value? Number of shares. Number of shares and equity share capital. That is capital that you invested, right? How much you invested? You invested 10 lakh rupees. Shares issued where 1 lakh shares were given to you. Hard copies of shares were given to you. So obviously one share was at 10 rupees. And vice versa. So what if 50,000 shares were issued? The face value would have been 20. Capital doesn't change. Number of shares do change. Depend. Now it is depending on company to company, how much they want to keep. Usually they keep it 10, 10, 5. Achha. Is it anything to do with the market value? Is it anything to do with the market value? Because now the shares are issued and now shares are traded in the markets. Now this 10 rupee shares are getting distributed everywhere. 1 lakh shares, I have 10,000, you might have 2,000, other people have different amounts of shares. That's it. It just keeps on moving here and there. And that has a value. That has nothing to do on the balance sheet. That has nothing to do in the accounting. It is a market value. When you issue your shares, your value as per books, was how much? 10 lakh. How it gets splits? How it get split? I will come on to later on. Tomorrow, I will tell you this all things, splits and all, bonuses and all. Now understood what is the face value? Something purchased at cost. And this never increases or decreases, okay? It only happens, that splits and happens when there is an corporate events. When they want to increase more shares. That is the only time they do split. When they want to increase more shares. Now let's say I want to make it 5. Okay. Chalo, you tell me, if I want to make it 5, how much shares should I issue? 2 lakh. 2 lakh shares. 2 lakh shares are issued. Why would I do this? Why would I issue more shares? Why would I do that? No, no, not on price. Let's say this is Nana, we are just a startup company. Why would I issue 2 lakh shares? More participations. More better. I am 10th standard. I don't know what is liquidity. Huh? I don't know what is liquidity. More participation is a better way of saying that more people will come onto it. So that, I might, if I want to sell something, I don't want to sell my 20,000 shares. Okay. So company saying, okay, we'll split it. We'll give you 40,000 shares. But what we'll do, we will decline the price of per value of the share. Well, I'm fine. So the next 20,000, I can sell it to someone else. So that more people will invest. That is why they split. Price is also one part. That is comes in the secondary market. This is we are talking about the primary sum. What happens at personal level? We have not gone into the stock market currently because the problem is you don't understand investors' point of view. You just want to understand what Warren Buffett will do. First thing, what you will do on a practical basis: cumulative, non-cumulative, venture capitalist, private equity. What is the difference between all? Then come common equities come at the last. Because when you start a business, you don't become directly equity holder. You don't start Reliance directly. It takes time. It starts from 0 to 1. You don't start from 1 to 0. Okay, I will open directly. I will start doing business and it will be an IPO first of all. First day. Zero sales, everything, IPO. And then I will talk about common shares, a market value, enterprise value, and all those things. That's basic. Understand P&L statement first, your own. Then go and try to analyze what Mukesh Ambani is doing. Okay, if you think that you are that qualified to understand what he is doing and what will be his next step. Okay, fine. Okay, guys, tomorrow I am not there. I'm so sorry for this. I have some unavoidable circumstances that I'm not available tomorrow in the evening. But we will start from Monday again. Fresh start from Monday. Achha, those who have not received, were absent in the last 2 sessions. I do have the recordings, but I'm not sharing it for XYZ reasons because it can be copied and it can be sent to someone else. See, all the things that I've told you today can be different from different professors, correct? Probably. And this was not difficult things to understand. Now, why I was able to do it is because I have lived that life, I have also been a private equity investor. I have also been an investor in the markets. I have also been in Indian markets. I have also been in the global markets. And I also invest on my own. Now I'm starting my own business, so I need to understand what all things are going on. That is why I was able to relate these things, which probably if I want to teach to my cousin brother or my juniors, I will not teach them as enterprise value, market value, and all. I'll first understand what business is, because I have come from an equity to a personal investing part of you. That is the reason I don't share these videos. So if you want to come, you come online. I am doing this free. I'm not charging anything. I was just want you to learn. So tomorrow when you talk with me, you talk it with some, let's say you are talking with some senior guy. Don't feel like I don't want my students to talk like an amateur guy. If not with me or any other guy in the industry, at least talk them as some experienced guy. Don't talk it ki mujhe mere paas degree and this and all. Whatever degree you have, even you are Harvard graduate, you cannot be Warren Buffett. You cannot be Rakesh Jhunjhunwala. You cannot be Mukesh Ambani. Okay. Every Harvard graduate is not a billionaire. Usually Harvard dropouts are billionaires. So even after doing CFA, CA, don't think that you will, you will be a billionaire because you understand the market, you understand valuation. And others also who think that CAs and CFAs are better than you, not like that. They are better than you because they have spent more time learning something that you are not doing. You learn this practically, you are also better than them. I have placed the BCom guy. I have placed the BCom guy into HDFC Securities. A BCom guy, where a CFA level 3 guy got a rejection. CA got a rejection over there, but a BCom guy was placed. It is not because of his BCom degree. And the CA guy failed or a CFA guy failed. It is not because of his CFA degree. It's because of the understanding of the things. So spend time understanding things. It will help you to excel in your career. I'm not saying come to my course कि मेरा course है तुम join करो and all. It is for specific people. I want you guys to get placed. Or else when you talk with me, चलो I will say I'm doing this. कल मेरे से बात करो LinkedIn पे तो we will share some knowledge. There will be a knowledge sharing session. Then just about talking. Hi sir, how are you? What is going on in your life and all those things. We'll talk on basics. Finance. I also like. Tomorrow probably you might meet my students. You might meet my friends who are in the markets. They will tell you, okay, you will tell me that Rishabh sir has all told all these things. Okay, we have studied our part. We have done CFA and all, but this all things are not a part of CFA exams. Yeah. Thank you so much. Acha, okay, Ritik. I will unmute you. Yeah, Ritik.
Hi, good evening, sir.
Good evening, Ritik.
My question is regarding convertible shares. Wouldn't it be preferable for a company to issue convertible instead of keeping it to preference over the years?
That's what I'm saying now. That's the reason I gave you. Why would you want someone to come to your company again? I will keep it preference only, no? Why would I give voting rights? Same answer, no? The question I told you. Would you like me to stay in your house?
No, obviously not. My reasoning is no one generally has that kind of equity to influence decisions. वो तो board of directors के
But
पास ही रहता है.
what if I am a majority shareholder in preference as well? So I will tell you this reason. Okay, no one has, as you correctly said, no one has that. Let's say I had 10% preferences. Okay, now this is not substantial stake. It was converted into equity. Okay, fine. I go, let's say you are in the market who is already having 40% stake. You go and get my 10% stake. What will happen? Can I do that? Preference gets converted into common. Do I have the risk?
Okay.
Do you have the risk of someone taking it over?
Yes, in that case, yes.
Yes, now this is so as a company, I will not issue, I will not convert it. Now, why it is convertible now is because the one who has substantial stake wants a convertible preference shares. But why will you unnecessarily do it on your own? These are the preferred, usually investors say that, okay, I will want a convertible preference share. Why? Because he assumes that, okay, till 10 years, till the first 10 years, I will receive at least some dividends. And if I think this company is growing, I would like to have a stake in the company. That is why convertible preference shares are given. Now, this is a view of an investor. That do you think after 10 years he will? So convertible preferences are not preferred from a company point of view, but investor point of view, yes, it is preferred. Why would I want a voting right now? Because if I am substantial stake and I want to participate in the company's growth phase, that I also want the profit share. I don't only want the dividends. Also want the profit share. So I will like it to get converted, but company will not like. I will say prefer है तो prefer ही रहना नहीं convert करना है मुझे.
But wouldn't it be more costly for a company? For example, if the company is growing and I get preference shares for say 5 years, so I
Hmm.
get 10% of dividend, whatever that is in listed there. I
हाँ
get that kind of dividend, and then when the company starts growing and
hmm.
starts issuing more dividends to common shareholders, I'll
हाँ
get that. And if not, I'll continue to get the listed amount for say 10% continuously for
हाँ
10 years.
hmm.
Wouldn't that be increased cost for company issuing dividends continuously for say 5 years or 10 years?
See, now that's where no, that company now, see who gives dividends. See, company, when company gives dividends, only large cap companies or growing companies give dividends. Okay, now this is other way. Now, if you think that you will not grow from here and dividend is a burden for you, and is it dividend compulsory, Harshit? Can stop, no?
Yes,
It is
it
not
can
fixed, no?
stop.
It is not fixed. Now,
Yeah.
cumulative, if it's a cumulative, then obviously there's a problem. But if it's non-cumulative or only preference, so obviously it is not fixed. No? Dividend, so you can stop anytime. Even if it's cumulative, you can stop now and give later on. It is okay for you. And why you want an additional cost? So dividends are given for assuming that company is doing good. You keep investing in our company.
Yeah, from reserves and surplus, if there is any.
Yeah. So from investor point of view, obviously I will like a convertible. But from a company point of view, it's okay. Now you take dividends. Why you want our personal life? Why you want to get into my personal things?
Okay, yeah, makes sense.
Makes sense. Yeah. Well, that is all. I see. I have not learned this anywhere. Not I have read it anywhere. This is my personal opinion. Obviously, per company hai to why would I want someone in my house giving me rights to do, giving me suggestions what to do and what to not? Okay.
Exactly. Yeah, thanks, sir.
Welcome. Okay, guys. Thank you so much. See you on Monday again. Have a nice weekend. You can go to our YouTube and you can watch our morning calls. I keep on updating it. Practical knowledge. If you want, don't have time to read newspapers, can go and watch it to you. Okay. Thank you so much. Thank you, guys. See you on Monday. Have a nice week ahead.